Let's bring in Greg Swenson now. He is founding partner at Brigg Macadam. He is in London this morning. Thanks so much for being with us, Greg. Would you characterize what we're seeing in the market right now as fear-based selling, or is it based in some sort of economic reality?
I think it's a lot of fear, and you can see that in the flight to safety, the flight as earlier comments were talking about flight to safety and the rally in treasury yields. So look, I think there's a lot of that. The market doesn't like uncertainty, and nor do business decision makers. So I think that's what the problem is. We don't know if this is going to be a near-term issue with the coronavirus, or this turns into a longer-term problem. But it's impossible to calculate right now what the damage will be. I mean, obviously there is going to be some damage, even in the U.S. Aside from from China, obviously. But look, I think there's going to be damage to GDP growth. Just looking at the obvious sectors like airlines and cruise ships. But you have supply chain issues that are already starting to alert business decision makers in the U.S. So I mean, there is going to be some of that selling for fundamental reasons, but it's hard to calculate that right now. So I think right now it's just fear. And as Oscar said, when there's news, when there's bad news coming out of different countries with new cases, that tends to spook the investors. Whereas today there seems to be a little bit of a pause in that.
Is there a feeling that the selling has been a little bit irrational? Some sectors that would seemingly be untouched by coronavirus also falling. We saw all 11 sectors in the S&P 500 in the red as well. And is there a feeling that things have been orderly? Has this been an orderly sell-off, or are you feeling some panic seeping in?
Oh, for sure there's some panic. I mean, I don't think you could have a 1,800 point drop in 2 days without pointing to some panic selling. And it is across the board. So I think it's just a risk off trade right now. I think if you can trade it, there's some opportunities. One of which is just buying volatility, obviously. But look, I think there are some sectors that are going to be really cheap here, notably energy, which has been the most or the biggest underperformer in this sell-off. So there'll be some opportunities, but I think it's adult swim. I don't think I don't think this is going to be over in the next couple of days.
I want to talk about Disney because we got blockbuster news after the close yesterday. The stock is lower right now in the pre-market, coming under pressure after the surprise announcement that longtime CEO Bob Iger is stepping aside immediately to become executive chairman, and his handpicked successor is the Parks and Resort chief, Bob Chapek. And Greg, I know that Iger had said recently he was going to retire at the end of 2021, but even people within Disney are saying that the timing of this was such a surprise to them. Why do you think it was shrouded in so much secrecy?
Yeah, I mean, I think it was a pretty interesting move, for Iger to announce that. And I think, remember, he announced and then changed his mind on 4 different occasions. So I think, this was an attempt to really take some uncertainty out of the speculation. And I thought he made some good points in the press conference as well as on the networks that look, this is a way for the new CEO, for Bob Chapek to spend some time with him, to have a year before he takes over completely. He's got a year, to learn other parts of the business. But I think more importantly, it was just a way to take away the speculation. Now, announcing it during this, massive sell-off in the market, that probably wasn't perfect timing. But I think they just wanted to get the news out before there was too much speculation.
There was speculation that perhaps he would tap the head of streaming, Kevin Mayer, to take over that job, given the fact that they now have Disney Plus, that streaming is such an area of growth for Disney going forward. Do you think maybe the reaction we're seeing in the stock is because investors don't love the fact that the head of resorts and parks is going to be heading up the whole kit and caboodle at Disney?
Yeah, I mean, you can make that argument that, that the future is digital, right? But the problem is, Kevin Mayer didn't really run a lot of businesses besides the one he's running right now. He's really a strategy person and came up in strategic planning. So he doesn't really have pure executive experience. And remember, Chapek, really knows the consumer. He's run consumer businesses throughout his 27 years at Disney. So, look, he doesn't have the charisma and the personality of Iger. And I think that those are going to be, that they are, hard shoes to fill. but he's got great experience running consumer businesses, and he's had some really great records. He had 13% annual growth for the last 5 years in his division. So yeah, look, I think there was some disappointment about Mayer, but I don't think he was the right person for the job.
All right, Greg Swenson, thanks so much. I know we're going to see you in our next hour to talk more markets. Appreciate your time.
Hey, investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.